Hello, I'm Jonathan Moyes, Head of Investment Research at Wealth Club, and today I'm with Dr. Nigel Pitchford of Downing Ventures to talk about the healthcare share class of the Thames Ventures VCT2. Hello Nigel, welcome to the studio. Firstly, could you give us a bit of background to yourself and Downing Ventures?
Yeah, sure. Hi, Jonathan. Nice to be here. So I'll start with Downing. So Downing is a multi-asset manager, has been around now for just over 35 years, primarily focused on tax-efficient strategies. Within that, we operate a healthcare ventures team, so it's solely focused on healthcare investing. And the products that we have in the market at the moment are around EIS and VCT. So we'll be talking about the VCT fund today. I'm actually a fairly recent joiner to Downing, joined in June of this year to head up our healthcare venture activity. Prior to joining Downing, I've had a long history in life sciences and also life science investing. So I started off as a life scientist before joining 3i back in 1997 now, it's a long time ago, where I eventually became a partner in their global venture team. So investing across the UK, the US and also Europe, always focused on life science investing. After 3i, I moved on to what was then called DFJ Esprit, later became Draper Esprit, is now Molten Ventures, where I was also a partner within the team there, prior to joining Imperial Innovations in 2012 as the Managing Director of Healthcare Investments there, before moving to being the Chief Investment Officer at Imperial in 2013. And Imperial was largely focused on investing in IP-rich companies that were spin-outs from Imperial College, but also from universities like University College London, Oxford and Cambridge. So very, very much in that very early stage of creation and building those businesses out to being quite substantial companies. So back in 2019, I had the opportunity to step out of venture for a while and actually joined one of my former portfolio companies, which was IESO Digital Health, so a leading mental health provider here in the UK. But through doing so through a digital platform. And I joined them as the CEO in 2019 and was with them through to actually all the way through to the summer of this year. And during that time saw the business grow substantially. So grew from about 80 people to 180 people, grew revenues from 5 million to in excess of 10 million, and did all of that through lockdown as well, which brought its own challenges to the firm and to the operations. And so for me, it was a great experience to see actually how companies of the type that we want to invest in, how they face up to some of the challenges of growth and how they face up to the challenges of fundraising within a difficult environment. And so that was great experience for me. And I bring that now back to venture, where we think we can actually lend some of that commercial and operational experience to the types of business that we're looking to invest in. And so, as I say, joined Downing in June of this year in order to lead our strategy in the healthcare ventures space.
So that brings us on to the healthcare share class then. What does it aim to do for investors?
Well, first and foremost, I mean, the healthcare share class is looking to create capital growth, but also provide income for investors. So we will talk about it, but we've locked onto a dividend policy where we'll deliver 4% per annum as a dividend, but we're also specifically looking for capital growth from that share class. I think where we're mainly focused, though, in terms of the strategy for that fund is on investing in companies that can actually make a real impact and can make a real impact to people and their lives today. So this is looking at the healthcare system as a whole and saying, it's facing various headwinds, it's facing various different points of pain within the healthcare system. And we can address some of those pain points by introducing new enabling technologies as clinical solutions that enable healthcare systems to benefit and to deliver better access to patients, better outcomes for patients, whilst reducing the costs of the whole delivery of that. And so for us, those impacts are material. For patients, those impacts should be material. And so we're primarily looking at a strategy that delivers across those areas of impact, and does so obviously while trying to generate return for our investors.
Sure. So are there any particular types of companies that you look to back? Any particular sectors within healthcare? Because it's a broad church of a range of activities in healthcare. Any particular sectors you're looking for?
It is a broad church, and I think we'd focus mostly on those areas that we've just discussed loosely. So where our interest primarily lies is around where technology can be brought to bear around problems that exist within the healthcare environment. So broadly, if you turn on your TV, you can't turn on your TV in the morning or in the evening without listening to the news and hearing about waiting lists expanding, without listening to complaints about the NHS, which is the biggest employer in the country but still has over 100,000 vacancies, about the challenges faced by the system in terms of delivering a quality of care that we as a population both need, require and demand. And so the way of, or we perceive that the way of addressing some of those problems that are the problems of today is by actually trying to find those tech-enabled solutions that can be deployed today to the advantage of those both operating within the system, but also those that benefit from that, which are the patients. And so our focus is around companies that have the ability to deliver those impacts around access, outcomes and costs today, not in 20 years' time. So we will be looking primarily at those tech-led companies. Sort of begs the question of what we might not look at. So we're probably not going to look at therapeutics companies, because the therapeutics companies themselves have a very different profile. They require significantly more time and money to be invested in them to be able to bring their products to market. But also, I think we're looking to make that impact right now, here and today, on the challenges that we face in our day-to-day lives.
And management teams, what do you look for in a good management team?
Well, I think a management team has to be ambitious, has to have experience, and I think overall actually has to be quite nimble. So they're going to face many, many challenges as they grow their business. And I think the combination of all of those attributes really makes for an outstanding management team. I think most of our management teams, because of the space that we operate in, they tend to have very strong clinical and technical skills represented throughout those businesses. And obviously where they don't, that's something that we would need to bolster if we were really, really interested in that proposition. But yeah, I think actually it's those softer attributes around how that team views the opportunity, how they want to take it forward, how they're capable of changing direction if they need to change direction, and making the decision to do so relatively quickly. I guess above all with the management team, when we get involved with the companies, we're probably going to be involved with the companies for a number of years. And so actually we've got to get on with each other. We've got to have a sense of alignment, that we share a common destiny in terms of where the business can get to and where we want to take it. And we probably wouldn't invest in a team where we didn't share that sense of alignment. So these are all important factors for us.
Mm-hmm. Sure. Do you have any recent examples of companies you've backed in the healthcare share class?
We have, yes. So our most recent investment is in a business called Sidar Medical, which is based in Cambridge. And Sidar is a leading tools provider. It's seeking to enhance the quality of images that are available to surgeons as they go into the operating theatre, and to enable them to plan operations better, to deliver operations in the way that they planned them, and then also to be able to check after they've done the operation whether they did it successfully or as they planned to do so. This is particularly around endovascular surgery at this point in time. And so Sidar has some great technologies that sort of span cloud computing, AI and machine learning, various other visual type technologies that it incorporates into its own platform that enables it to deliver those benefits for surgeons, and clearly has a number of other applications that it could go after in the future beyond endovascular surgery. And what really interests us around that business is not only the technology, not only the application which should improve patient outcomes. It should reduce time in surgery, therefore reducing costs as well. But also the fact that it's a system that's been designed by and built by surgeons alongside technologists, and is now starting to be adopted not only here in the UK, but in the US and in Europe as well. So it's getting traction with the very surgeons that it seeks to enable and help.
Yeah, very interesting. Do you have any examples of companies that are perhaps more mature in the portfolio, and any particular highlights there?
Yeah, again, it's the portfolio includes a number of companies that have that follow similar themes. One of the more recent businesses that's just been refinanced is a company called Fundamental VR. Very different place. This is around providing virtual reality training for medical educational training for surgeons in particular, but for clinicians more generally. And it's a business that we actually sort of got involved in as a Series A investor, led a Series A round for, helped build the team, helped build the platform, helped start the company down its early stages of commercial success. And again, now it's providing systems across the world. And most recently was a company that actually saw itself get a $20 million investment round away during the summer of this year, which was led by EQT, which is one of the bigger, more notable investors in the life sciences space across the world, but particularly here in Europe. But, you know, again, building on the foundations of what we've been able to do with the company and what we've achieved with the company is now on a great path to success, and will continue to remain supportive alongside them.
And that, I suppose, besides funding, what do you do practically to help these companies succeed? And particularly given your background, and you've just come into Downing recently.
Yeah, so my background, whilst I've described it, it's primarily around investment expertise, but I think what was really important for me and why I stepped out was to gain some operational experience as well. And that's going to be a common factor with our investment team, is that they will also have operational experience that they can bring to bear around the companies. And so I think that's really important, actually, and I think it's quite differentiating. When we go and talk to businesses, it's really important for us to be able to have a conversation with them about where they're going, about the pain points that they're struggling with themselves, about critical decisions that they're about to make, where we have some experience, where we can actually say, you know, we've tried that before, it didn't work. You might want to try this model or this model before making that decision. So I think bringing that operational experience to many of these businesses, they see as being incredibly helpful to them, and we see as being incredibly helpful in terms of setting the companies off on the right path towards hopefully being able to make the decisions right the first time round, and not waste time or money in repeated attempts at trying to deliver the same goal. So I think that operational experience is a key factor that we'll be able to bring to the businesses.
So the current environment, it's become a little bit more uncertain. Does that affect the way you invest, and how is it affecting the companies you're backing?
No, I don't think it does affect the way that we invest, actually. I think the companies that we're looking to back are typically revenue-generating businesses within this intersection between healthcare and technology. And they tend to be providing products and solutions to healthcare services and to, like our National Health Service, for instance. So that type of customer is incredibly sticky, is also looking for benefits that it can bring to patients. So again, around the core aspects of access and outcomes, but is also looking for solutions that it can deploy that address cost pressures within the system as a whole. And so these are the three areas that we're primarily focused on. And so actually what we're seeing in the market at the moment is that there are a large number of companies that are actually starting to deliver some real benefits for both patients and systems, where they do get some commercial traction, where with investment from the likes of ourselves, they can go beyond where they've built the company to today into being move from hundreds of thousands of revenue to tens of millions of revenue, and start to take their solutions not only or deployed throughout the National Health Service, but also deployed internationally into bigger markets, in particular the US. And so I think actually the type of business that we're looking for, so revenue generating, delivering clinical solutions that address access, outcomes and costs, is for us, I think, a real sweet spot and won't be something that we'll be moving away from, but it's also so much in demand given the current pressures upon
So it's
both
relatively
healthcare systems
insulated.
and the economy. Yeah.
Okay. And given the recent stock market falls, have you had to revalue the portfolio at all?
Most of the portfolio within the VCT is still private. And there are some companies within the VCT that are public, and where they're marked to market and those valuations have come down, then obviously we do have to mark them to market and bring the valuations down as a result within the portfolio. But primarily the portfolio is essentially private. Those businesses tend to be valued on the last round of investment, but it's something that we look at on a quarter-to-quarter basis to make sure that that's still justifiable. I think for most of these businesses, those we've described, they are going to be revenue generating businesses and they are tending to grow. So we're continuously hopeful that whilst markets might decline in one direction, the growth of the companies that are within our portfolio is some countermeasure to that.
What are the biggest challenges you face at present as an investor?
As an investor, I'd honestly say the biggest challenge at the moment is around selectivity, because actually we see so many great companies that have got to a point at which we're really interested in them, but we don't have very much bandwidth to be able to invest in as many opportunities as we'd like to do so. So we're still building a team, we're still building the asset base that we have, and we're still building capital that we have within the business in order to be able to take advantage of some of those great opportunities. So we do have to be quite selective, and we do have to be really focused on the ones that we think that we can help and that would benefit from our input, but would also present great opportunities for our investors to benefit from return in the future.
So how risky is this part of the market?
So I'd actually say this part of the market is probably less risky than typical venture, because most of the businesses that we're looking to invest in are going to be revenue generating. So they're already going to have customers, they've got a go-to-market proposition, they've got product that actually works in the hands of clinicians, and the customer themselves, the clinicians or the healthcare service, are reasonably well funded and are in need of these types of solution and what we can deliver for them. So I think most of the businesses that we're going to get involved in, I'd say, are relatively low risk of complete failure. That's not to say that there is no risk in those businesses. The risk is more around commercial execution and how we can actually grow value within those businesses going forwards. But I'd say they're relatively low risk. I also don't think that the upside in those companies is capped, and we don't need unicorns in order to pay for the return across the portfolio as a whole. So I think there is some opportunity there to actually see a number of businesses perform exceptionally well within the portfolio as a whole. But I do think the chances of failure for each of those companies that we invest in is much, much lower than the market average across VCTs.
So Nigel, what about exits within the portfolio? Any exits you can speak of?
Yeah, our most recent exit was a company called Future Healthworks, which had a variety of different websites and available to people with orthopedic conditions, including musculoskeletal, that helped them to manage their conditions, that helped them manage their pain and also their recovery. So that business was acquired earlier this summer, made a nice return for us, but also demonstrated, I think, and reinforced the fact that the space that we're choosing to operate in is a space that's got lots of promise, and I think is also a space where there's going to be considerable consolidation going forwards of small businesses as they start to become consolidated into much larger companies with broader offerings that are capable to be offered system-wide. And so I think that for us is also one of the opportunities of operating in this space, is that that consolidation wave will arrive, and that I think our companies will be very well positioned to both take advantage of that They might want to acquire businesses themselves in order to grow or be consolidated.
Okay. And how's the performance of the VCT going as a whole?
Yeah, I think the VCT is performing much better over the last few years. It has struggled because it was relatively new VCT in 5 years ago when it was first launched. And so it's sort of come through that initial period of both cash drag and seeing some of the very early investments that we made at the time maybe not succeed in the way that we hoped they would. And now it's starting to perform much better. And of course, it's now got new management in terms of myself and a refocused strategy in terms of where we're going to be targeting. And so we're actually pretty confident that from this point going forwards that we'll actually be able to deliver exceptional return for the investors into the VCT.
So to sum up, Nigel, I would like to invest in a VCT this year. Why should I invest in the Thames Ventures VCT2 healthcare share class? We
have a dedicated team of investors that both have investment experience but also operational experience that we can bring to bear around our portfolio. And we think this is quite differentiated. There are not many teams out there that have got a similar level of experience. We're also focused from an investment strategy perspective on companies that can make a real impact today. So they're going to be delivering better outcomes for people. They're going to be delivering access to high quality care, and they're going to be driving out costs from a healthcare system. All of these things are things that are going to affect both you personally, your family, or your friends over the course of the next few years, and you can have a direct impact in terms of how they receive their care and how you might actually contribute towards making the system as a whole a much better place for us. Finally, of course, let's not forget about returns, because we believe that this particular space within the market is one that's ripe for future consolidation, will also deliver excellent capital growth, and we've got a very strong dividend policy that we intend to stand behind. So I think all of those are reasons why you should be investing in the VCT healthcare share class.
Fantastic. Dr. Nigel Pitchford of Downing Ventures, thank you very much.
It's a pleasure.